Okay, welcome back, guys. So we're going to be speaking about time frame correlation today. If you haven't already, just go back to watch the videos that we've posted on the channel, the course playlist, and you'll be able to understand the stuff that we'll be speaking about. And obviously, if you're in a Discord chat, then you can join our live sessions where we go through certain pairs. And obviously, for the beginning of the week, we see opportunities in the market and how we'll take advantage of it. But for today, we're going to continue with time frame correlation. It's really important to understand time frame correlation because the idea is for the higher time frames to correlate with the lower time frames, meaning that if the indication on the higher time frame is up, then the indication on the lower time frame must be up as well. So if you have an indication on the higher time frame being up and the indication on the lower time frame being low, there's no point of you entering the market until that correction is completed on the lower time frame. What do I mean by that? Let's say this is the 1 hour time frame. 1 hour time frame. Let's say this is the 1 hour time frame. Actually, because we do our markup on the 4 hour time frame, let's start with the 4 hour time frame because that's where you're going to do your markups for the market structure, right? So on a 4 hour time frame, you come into the market and you're seeing something like this. Let's make this one green. You're seeing something like this, right? You come into the market and you're seeing something like this. We know that from the strategy that we trade ICC, right? Trade by side. We trade ICC. So our strategy ICC, which is indication, correction, and continuation, right? So what do we mean by indication? Indication is when swing highs and swing lows are being broken. So for this particular structure, if you come into the market and then you see something like this, you know that this has indicated that the market wants to go up. Why has it indicated the market wants to go up? Because this swing high has been broken, right? It got broken by this new higher high. So this becomes our new higher high. This becomes our new higher high. Let's make it, no, sorry guys, higher high, not higher low. That becomes our new higher high at this point. This becomes our new higher high. This was our lower low, right? So this is our lower low. These are templates that I made myself. You can do that yourself as well. That's lower low, and that was the previous high, right? So this was the high that got broken by this high. So before this high, that was our higher high. So let's put that high there as well, just so you guys know. So this was our higher high as well. So what do we know about markets that are trending to the upside, markets that are giving us bullish indications? It means that you're seeing higher highs and higher lows, right? So this higher high was broken by this new higher high, and then it created a new higher low. That low did not break this lower low, so this becomes our new higher low, right? So this becomes a higher low. Why is it a higher low? Because it is higher than the previous low. It is higher than this previous low. So anytime you're seeing higher highs and higher lows formed, you know that the market is trying to go to the top. So if you come on the 4 hour time frame, you're marking your swing highs, you're marking your swing lows, and this is the high that this is the high that has been recently broken, right? And then you see that this has gone back up here. What do we mean by this? We understand from the videos that we've done in the past that anything below this point, you know that sellers are here, right? You know that sellers are there. And anything above that, you know that buyers are there. So anything above this, you know that buyers are here, right? You know buyers are here, sellers are there. So you know buyers are here. And you know that sellers are here as well. Anything below this, sellers are here. So the buyers are pushing the market up, the sellers are pushing the market down. At this point, anytime the market got to this level, it broke that resistance level, giving us that higher high, came back and they gave us a higher low, and then it's broken that level again, knowing, telling us that the market has potential as well, moving to the top. So if you see this on the 4 hour time frame, you want to see the same thing happening on the lower time frames. And don't forget, when it comes to the correction and continuation, from the videos that we've mentioned, from the videos that we've explained before, we've already told you that you have to go to the 15 minutes time frame or the 5 minutes time frame to be able to, get your corrections or your and your continuation. So this is going to be our, let's make this one our 15 minutes time frame. So that's going to, let's make this one our, oh, sorry guys. So this is going to be our 15 minutes time frame, right? Or maybe 5 minutes time frame. This can be done on the 5 minutes TF or 15 minutes time frame. So on the 5 minutes time frame or 15 minutes time frame, you want to see something similar to that, right? Because remember that this is our indication. This is our indication, right? So this one, let's do it the other way around. Yeah, I'll delete. That's our indication. Sorry, let me spell it right. Indication. Let's make that black as well. Let's make it maybe 12. All right, so we know that that is our indication. Let's make it a color that stands out a little bit. Yeah, there we go. So that's our indication, right? And we know that this will be our correction. Oops. This will be our correction. Yeah, I just don't want to do it. I'm just trying to, duplicate it. But yeah, you understand it. Let's make it a different color as well so that it stands out. So that'll be our correction. Let's make this one, let's make it blue. Yeah. So that is our correction, right? Let's take this one here, actually. Let's make it a little bit. Yeah, there we go. That's our correction. And our continuation will be this one. This will be our continuation. Let's make this one green. And let's rename it to be continuation. That will be our continuation, right? So what we are going to do is we want to see the same thing happening on the 15 minutes time frame. So in the 15 minutes time frame, you're going to see something like this. On the 15 minutes time frame, you're going to see something like this. Sorry about the noise in the background, if you can hear anything. So the 15 minutes time frame, you're going to see something like this, right? And why are you going to see something like this? So this part is going to be that part, right? And then you're going to see the indication as well. So if you come here, that's going to be your indication, right? And then this one will be your correction. And then this one will be your continuation, right? So what you're seeing on the 4 hour time frame is going to look like this, but what you're going to see on the 15 minutes time frame is going to look like this. Why is it like that? Because it takes a shorter time for 15 minutes candles to be completed. So this is what it's going to look like. So like I said, sorry about the noise in the background here. So like I said, if you see that when the market came above this level, the market gave us an indication to the upside. That's the same thing that you're looking to see on that 15 minutes time frame. They have to be the same. So if you come here and this thing is here, you are not trying to enter the market. Why? Because it's below where the sellers are. You want it to go above it. You want it to break that support. You want it to break that resistance. And once it breaks that resistance, then it means that it's the same as you can see on the 4-hour time frame, right? So it means that if you go on the 4-hour time frame, you're seeing that the indication to the top. If you go on the 1-hour time frame, you're going to see that the indication is to the top. And then if you come on the 15 minutes time frame, because it's done the indication as well, it's done the correction, and then it's continuation, you can see that it has also broken that same level and now giving you the same thing, the same indication, right? Because remember, the correction becomes an indication. So now it gives us the same indication that what it wants to go to the top. And what we aim for this one to do is to also go and break that higher high. And when it breaks that higher high, that gives us a new indication. And then obviously it begins to continue the trend until, it gets to the place that it needs to get to. So on the 4-hour time frame, you see this, and then once the correction begins, right, you scale down to the 15 minutes time frame or the 5 minutes time frame. And then when you see that it has gotten to that level and it has broken that last high, it has broken above that last high, giving us an indication to the upside, you can literally enter the long from there. So you can put your position over there, target, go to the 1-hour time frame, or you can even use the 15 minutes time frame, target the recent low or any of the lows. You can target any of the lows. And then obviously what you're going to do is you're going to aim for the higher high on the 4-hour time frame. So you're going to aim for this high. So this high is going to be the same as this one. Oops, what happened? So this high is going to be there. So what I'm saying is it's the same thing. There's no difference. It's the same thing that is happening, right? So let's make this one here so that it's quite clear. It's the same thing, no difference. Oops, sorry. No difference. The same thing, just a repeat on the 15 minutes time frame. So everything happening. Let's delete this one. Everything happening on the 4-hour time frame is the same thing happening on the 15 minutes time frame. But in order for you to enter the market and to make some money, all you're looking is for the same thing that you see on the 4-hour time frame to happen on the 15 minutes time frame. So we saw an indication on the higher time frame, 4-hour time frame, and then obviously it will do the corrections on the 15 minutes time frame. But once it goes above this level, the level that broke that higher high, and then you see that you just can enter the market, because now it's all doing the same thing on the higher time frame. It's indicated to the top just as the higher time frame. So you can enter the market here. And where will your target be? Your target will be the most recent high. So the high will be where you target first for your first take profit. And then obviously you can target any other higher highs that have been formed in the market. And obviously you can put your stop loss at where the recent low was, or you can even give yourself a little bit of space so that you know that your stop loss is not necessarily like tight. So that's what time frame correlation is all about. It's very simple to understand. Watch this video several times if you're finding it difficult to understand. And if you have any questions, like I said, don't forget to always put it in the Discord chat, the question channel, and I will be able to explain it to you. So what we are going to do is we are going to go into a live market, and I'm going to try and see if we're able to find some examples to show you on how the time frame correlation will be like. So let's try this one, right? Let's come here and let's use this as an example. Okay, let's use this as an example. So at this point, we're going to mark up our highs and our lows. So if we come into the market, we know that that was a low that was created, giving us a new lower low. So we had a new lower low being formed here. This was a new lower low being formed here. And where did that lower low come from? It came from this high. So that is the high over there. So between this and this, we know that we're in a bearish market. If you don't understand how we got to this, you can go and watch the market structure video where I explain how to mark up your highs and your lows when it comes to you understanding whether we are in a bearish trend or a bullish trend. So currently we're in a bearish trend on USD JPY. It hasn't broken any of the highs. It hasn't broken that high, hasn't broken this low, right? So what we are waiting for on this particular one, on the 4-hour time frame, we have an indication already, right? So we have an indication already. And then let's mark up our key levels. Remember what we said on that video. So you mark up your key levels. So this is your lower low. Sorry about that. This is your lower low. This low came from this high, and then this is where it came from as well. So you can draw your line here, and then once you do that, you can position your highs and your lows very right. And then once remember, it's not just a line, it's an area, right? So that's what you're looking to do. You're trying to draw an area where you know that anytime the markets get to that area, there's going to be some sort of reaction. So let's increase it a little bit to let you know that anytime the market gets to, oops, sorry about that. Anytime the market gets to that area, we're looking for some sort of reaction to take place at that level. So let's do this, and then let's extend this as well, because I'm trying to use this one to explain the time frame correlations. So okay, so we've marked our levels. I have templates that I've obviously saved for these type of levels, but for now I'm just going to leave it like this so that you guys don't get confused. So we know that anytime the market gets to this level, there are going to be sellers pushing the market to the upside, and then we know that there's also sometimes reaction in this, at this place. But remember, anytime you're between the highs and low, this place becomes your your no trade zone. So this whole place becomes your no trade. So you don't trade between these levels. What we are looking to see is for one of the levels to be broken. So we want the high to be broken or the low to be broken. So ideally this one gets broken, gives us the indication, it corrects itself, and then obviously begins to go and break that high over here. It begins to break it, right? If it doesn't happen this way, obviously what you're looking for is for it to also come to this level, and then obviously give you indication to the downside, break it, and then target whatever levels that it needs to target, right? So now this is what we are looking at. So when I'm saying that the time frame correlation would have to be the same, we are going to say that on the 4-hour, because nothing is happening right now, we're not going to do anything to it. But what's going to happen is that anytime we have an indication on the 4-hour, we are going to scale to the 15 minutes, and then we are going to look for the same thing as well. Do you understand? We'll scale to the 15 minutes, and we are going to use the same thing in order to ensure that we enter right and make the profits that we want. But for this particular example, I'm gonna try and use this thing to explain to you. So we're just going to assume that this is our low, right? Like the market structure stuff. This is our low. That low came from this high, and then came from that high came from this low. So that will be our level, right? So let's draw a box around this area. We're just going to focus on this area because that's to be fair, let's just lay it for now, and then I'll explain later. So we're going to put, these are the levels that are our key levels. These are going to be our key levels. Because it's too tight for now, I'm just going to use the lines, so don't get confused about that. These are going to be our key levels. The key level is not a line, it's supposed to be an area. So just bear that in mind. But for this example, I'm just going to draw the lines so that you can try and understand what I'm trying to do. So on the 4-hour time frame, you're going to assume for this particular example that everything happening here is not here at the moment, right? So just assume that everything happening here is not here at the moment. So on the 4-hour time frame, we come on the 4-hour time frame, we know that okay, this is a low, right? And then obviously we have our high here, but then what happened? The indication to the downside didn't work. Why did it not work? Because we know that at this level that low was broken, right? But that didn't work. The high here got broken, giving us that indication. So this becomes our indication around the 4-hour time frame. This becomes our indication on the 4-hour time frame. So the minute we see this indication on our 4-hour time frame, to be fair, this example may not necessarily work, and I'll explain to you why it will not work, because it's not actually. Let's go for it. This is going to be an indication of 4-hour time frame. The minute you see this indication and you begin to see corrections happening, what you're going to do is you're going to scale down to your lower time frame, which is the 5 minutes or 15 minutes time frame. That way you'll be able to see clearly what's happening, right? So you come on your 15 minutes time frame. This was the high that got broken. The indication came from this, right? So what you're looking to see as well. So if you come to 15 minutes time frame, that's going to be, if this came from here, from this level, and then here and there, those are going to be your levels on the 15 minutes time frame, right? So let's draw the levels on the 15 minutes. So that's going to be the high. That's going to be a reaction point as well in the market, and then that's going to be the low that created a new high. So on the 15 minutes time frame, what you're looking for is the same thing that we saw on the 4-hour time frame, that the high in the 15 minutes time frame gets broken. And that's exactly what we saw at this level. You see that the high has been broken. So this high has been broken, and the minute that high breaks, it gives you an indication to the upside, just like it's happening on the 4-hour time frame. So you have to monitor that. So what you're going to do is that it gives you that indication, right? So it gives you the indication to the upside, it corrects itself, and it begins to give you the continuation. So all you can do is you can get the correction, and then once lower highs begin to form, lower highs begin to form, higher lows begin to form, sorry, because at this point what you're seeing is that you're seeing a higher high being formed, right, and a higher low being formed. Why is a higher low being formed? Because that low is lower than this low. So a higher high being formed, a higher low being formed, a higher high. This is not a higher high. This is what? This is a lower high because it's lower than that. But guess what happened at this level? You know that another indication gave you, it gave you another indication to the upside. So what you're going to do at this level, once you get this correction to the downside and then a continuation, you can literally enter the market from this point. You can literally enter the market from this point, and then you scale to the 1 hour. Once you scale to the 1 hour, once you scale to the 1 hour, then obviously you can just take this one to the recent low, which will be that low, and then you can literally target the high, the previous high. So the previous high would have been this high, and then what will happen was that it will play out just like you want it to play out, right? To be fair, this would have taken you out of the market. It would have taken you out of the market. But if you don't want to, so usually what happens, I like this example to be fair, because what happens is that sometimes you want to target the wick, right? Because that's the wick that we're targeting. But if you targeted the body, then you would have easily come out of the trade without having it go back to hit your stop loss. And that's why I usually tell everyone that I like using the full body, not the wick, because the body tells you what the market wanted to do. The wick gives you an indication of where the market went, but it doesn't clearly tell you where the market wants to go, right? So if you targeted the body of this high, then you would have what? Made some profit without. But if you targeted all the way to the wick, it means that there would have been a retest, and then obviously you're taking it out of the market and then still went into the same direction that you wanted it to go. But yeah, it's always good for you to target the body. That way you'll be able to, make some money. But I hope this is understandable. And if you do not understand it, watch it a few more times. And then if you have any questions, join the Discord and then put the questions in there. I'll be able to help you, answer those questions. So yeah, thank you all for your time for today, and I'll see you in the next video. Thank you.